silver is going to lead gold, is our argument. And I have certain expectations of silver that are rough, but at minimum, I think you could see $200 silver in the next 6 months or so. It wouldn't shock me to see silver at some point in the next couple of years during this, what I think is an oncoming crisis, to be $1,000 an ounce. We've been playing with it for 100 years and it's just created boom busts. Let's go to real money.
Back to the 4,000-year history of gold and silver, one is quickly able to find that the relative price of the two precious metals was long at equilibrium between 15 and 17 and that high gold-silver ratios are a relatively new phenomenon. It appeared only in the second half of the 20th century and it has been shaping the situation since then. Whether the current high gold-silver ratios will continue to exist in the long run is then a more than a valid question. Trading at an approximate of 73:1 with gold at $4,200 and silver close to $58. This change of structure can be seen as a culmination of an 11-year base of consolidation, which implies that the long-term performance of monetary metals as compared to paper facilities could be underway. Michael Oliver comes with one of his best warnings of momentum. He forecasted $200 silver in 6 months, a figure that would seem absurd to most, yet he supports it by claiming that history bears it out. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
Top chart is back to 2020. Silver versus gold. You divide an ounce of silver into an ounce of gold, express it as a percent. And back then we were under 1% in early 2020. And it exploded to 1.5% in a matter of a year. That was during that 2020 surge in the monetary metals. Gold went up 40%, silver doubled. So the spread increased. After that, silver, though going up in price mostly, had an erosional backing off on the performance. And it developed a downtrend and also a green horizontal ceiling. It blew through both last month. It's fully broken out of a massive base that goes back to 2021 on that green line, which is the most important one. So not only are the monetary metals now going to beat the S&P, but within the monetary metals, silver is going to lead gold, is our argument. And I have certain expectations of silver that are rough, but at minimum, I think you could see $200 silver in the next 6 months or so. Sounds lunatic? No. There's many other historical comparisons where other markets have done comparable events with far less fundamental driving factors than silver has right now. And it wouldn't shock me to see silver at some point in the next couple of years during this, what I think is an oncoming crisis, to be $1,000 an ounce. God knows where gold might be at that time. Bull market in 79.80 took silver to 6.5% of the price of gold. Okay. The bull market in 2010-11, when silver hit $50 again, was at 3.5%. Right now, this chart is not up to date. Right now, we're pushing up toward 1.4%. But even 1.4 to go up to 3.5, which it was during the last bull market, is a huge gain. It's almost tripling in the relative value of silver to gold. God forbid you go to the 1980 peak reading, which would have 6.5% the price of gold. And silver's not going up, by the way, and gold's sitting still. So as we're measuring silver relative to gold, we're measuring silver versus another rising market as well. So it's kind of hard to tell. We think this spread is likely to go in this surge up to at least 3%, meaning silver should at least double and a half. And once the spread breaks out, by the way, which it has just now, silver gold, you go back to 79, you'll see a similar incident in the summer of 79. 5 months later, silver quadrupled to almost quintupled in 5 months. 2010 to 11, the last 7 months of that bull trend, silver doubled in a half in 7 months in net price. Think about it.
The U.S. has always been the core of the global financial system, with the U.S. dollar acting as the support of the world economy. There have always been critics of the dollar system. After the global financial crisis that took place in the year 2007 to 2009, there was a devastating spillover on the U.S. monetary policy and an increased exposure to dollar-denominated debt in the emerging economies. As Michael Oliver says, the concept of a strong dollar is mostly a myth. He is of the opinion that the dollar will go a lot lower, perhaps to the low 70s like it did in the bottom of 2008. Now let's jump straight into the content.
The dollar index has been in a massive staircase decline since the 1980s. In fact, that one of the charts on that report just shows that. And when people talk about the strong dollar, what are they smoking? I mean, when you stand back and look at the last decades of the dollar index, it's just blob, gets a rally, multi-year rally, blob to another low, rallies to another lower high. It's a decaying process. We think the next leg down has commenced. We think it commenced at the close of March of this year. And at that point, it was dropping sharply. It was at 104.21 to be precise. Right now, we're trading in the 98s. After that 104.21 close in March, there was a sharp drop in April and into early May. Hey, what happened at the same time? S&P had a sharp drop into April, okay? And then S&P rallied and rebounded. I mentioned this S&P to the dollar because so many people think they're not correlated. To some extent, they really are. When you look back over the last 30 years, major highs, major lows are often fairly coincidental, and broad trends are coincidental. But anyway, so the dollar index broke structure on annual momentum. When you plot the annual momentum chart of the dollar, you see a slightly different picture than when you look at the price chart going back, let's say, the 1980s. There was a 13-year uptrend line on momentum that wasn't evident on the price chart. We blew it in April. Sure enough, we dropped to 96 area. Since then, as the stock market has been rallying off its April low, the dollar has been holding around and above its April low, but really not mustering a rally. It gets like a 2, 3, 4-point rally and it goes boom, right back down. Back up again, whack it down again. It's in a range, a very narrow single percent digit range in price that isn't getting off the mat. It got beat down in April and it's just laying on the mat, lifting its shoulder and getting whacked back down. The issue is it going to continue down? We argue yes. It would not surprise us that the low that was made, it was at 2008, I think it was around in the low 70s on the dollar index. Right now we're in the upper 90s. Could come out. In other words, a whole new leg to a new low. Its correlation to gold, now, everybody thinks, well, as the dollar goes, no, it's the decay in money units, period, not just the dollar that drives gold. But actually, look, if you look back at where gold was in December of 2015, it made its bear low at 1,050. It's 4 times that price now, okay? Go back to the dollar index in December of 2015, it was in a rally phase and peaked for a while in the 98 area, right where we are now. So if you draw a line sideways back to 2015, we've gone either side of that number on the dollar index, yet gold is quadrupled. So my argument is the decay in the dollar is important relative to the others, but ultimately gold is driven by ongoing decay in all the paper money units, not just the dollar. Okay.
The world is moving towards a more fragmented monetary landscape. Countries are diversifying their reserves into gold and other non-dollar assets. At the same time, regional payment systems are proliferating and dollar-denominated lending to emerging economies is declining. Lower interest rates, ongoing currency debasement, supply-side dynamics and the need for diversification will support commodities and drive gold and silver to new highs. If global trust in paper currencies continues to decline, what assets do you believe will perform best? We'd love to hear your thoughts in the comments below. If you enjoyed this video, give it a thumbs up and make sure to subscribe for more updates. Thanks for watching.